Hi, this is Dustin with Dustin's Dollars. Today I'm going to be talking about Enviva. This is a wood pellet producer, and I'm going to be talking about sort of an introduction over company, an introduction to the company and the stock, an overview of what they do. And this is going to be the first in a couple video series where I'm going to be talking about Enviva. Before I begin, let me remind you that I'm not a financial advisor or a financial professional of any sort. All opinions I express in this video are mine and do not represent those of any company or any other individual. I currently hold a long position in Enviva, so this video should be for your entertainment purposes only. Because I could be wrong about everything I say in this video, you need to do your own research before making any investment decisions. So Enviva is a wood pellet producer, and super quick. Their basic business model here is they gather up sort of leftover wood, right? So they are they go out to places where wood is being harvested, and the high quality wood or the good wood goes to the sawmill, and they use that to make lumber and other stuff. I don't actually know that much, but Enviva is able to take some of the leftover wood, some of the scraps and other things where it's not really useful for some of the other purposes. So they're getting wood for much their raw materials that they're gathering. They're getting at much lower prices than what traditional lumber sourcing would cost. They take those and they basically dry it in these big, I guess, kilns or these big, you know, ovens to some degree, if you will. And then they put them through another thing that pressurizes them and pushes them through some sort of a press, I guess, and makes these little wood pellets. And then this gets, they sell them to folks who need fuel to burn. A lot of their customers are utility companies. This is a drop-in replacement for coal, and that is, sort of in a super quick summary what they do. I'm going to jump over and have a quick overview of their stock itself, before I then go deeper into the company itself. And so the stock, if you look, this is only the 1 day chart, but if you look over the past, 5 years, Enviva had this sort of slow, steady growth, and then it went really high up, as with a lot of things in the market, up to 2022, and now it has actually dropped quite a bit. And today's closing price was at 28.92, and that is similar to where the company was trading 5 years ago. And I actually didn't look further back than 5 years. They have been a public company for even longer. Um, but you look here and they've had this precipitous drop. And one of the other interesting things when you look into Viva, right? So let's look at a couple high level aspects. Market cap is, a bit over $2 billion at the moment. And, their stated EPS is negative. I will cover that probably more in a future video because there's a lot going on with their actual financials. But one of the super interesting things about Enviva is that they pay a dividend, and they pay this almost a 12% dividend right now, somewhere between 11 and 12%. And obviously that is massive. And so that will also be the subject of a future video of how safe is this dividend in the near future, and digging into the numbers to kind of look at that. But that gives you sort of a rough overview of the stock itself. Now let's go back over to the company now that we've got covered like the very basics out of the way, and look at a bit more. So they own production facilities where they actually take in the wood and then turn it into pellets. And they have this nice overview in their investor presentation. By the way, that's a lot of this today is going to come from their investor presentation. I've dug through their filings, and I'm trying to pick out the most relevant and important pieces so you can get an overview of the stock. They have these existing production facilities all over the southeastern United States, which is also where they source most of their wood from, right? So these facilities are to some degree located near where they're able to source the wood. And then they also either own or lease ports where they then are able to ship out the wood. I don't know if I mentioned it when I said a lot of their customers are utilities. A number of these customers, and I think their largest customers, are European utilities. And I think they've started to sign some contracts for some folks in Asia as well. So these pellets are actually getting, a lot of them are getting put on ships and shipped to the, other parts of the world. They're not necessarily consumed in the United States. All right. And you look at this, and they have also the capacity for each of these facilities, and they overall, I think there's a summary here where they have about 6.2 million metric tons per year of production capacity as of right now. That is something that is they're hoping to grow in the future. And if you look at this right here, you can see they have two sites already that they are near-term targets for them to actually build and complete the plant in the Epes, I'm not sure how you pronounce it, and then one in Bond, Mississippi. And so those are two near-term plants. And then you can see they also have some additional sites that they sort of have earmarked for potential future expansion as well. And so they are growing, and that's going to be something I'll talk about more in a future video. But I talked about, utilities use this, and one of the reasons they do this, right? Look at the why wood pellets, why not some other fuel, why not natural gas, right? If you've watched my channel, you know that I also am fairly bullish on liquefied natural gas. Well, in Europe, at least, in addition to the cost of fuel, there is also costs for carbon emissions. And this nice bar chart that they have here down in the bottom left corner of the slide, you can see they compare, at least at a point in time, what is the cost per unit of energy of various fuel sources. And you can see the blue represents the cost of the fuel. And so, wood pellets is kind of on par with natural gas and oil, but drastically more expensive than coal. However, when the cost of the carbon is added in, which I believe is required in Europe, and carbon costs have gone up, the wood pellets actually are cheaper than coal, cheaper than everything else, at least at the snapshot in time. And I think that's something that, in addition to being cheaper when you factor in the carbon costs, it actually lets those companies say that, hey, we are not actually emitting. There is no carbon, right? It's not just, well, we're just paying the tax on carbon, but we're still emitting a bunch. They're actually just not emitting by using the wood pellets. I know that is I think there's some controversy around the actual emissions, the actual impact in terms of carbon with wood pellets. But as of right now, I personally have no opinion, don't know, anything about that firsthand. And so I'm going off of what the laws are in Europe. And if the laws effectively are that there are no, they view it as being a net neutral carbon fuel source, then economically that is going to help out. And so that is, again, a big part of the unit economics that makes wood pellets cheaper and therefore attractive to these folks. So one other thing to look at in terms of, we talked about Enviva right now is roughly a tad over $2 billion in terms of the equity. They also do have a fair bit of debt. And this is from their very recent investor presentation from a couple weeks ago. And it's called as of December 31st, 2022, but it's actually, as it says here, pro forma for the pipe and the term loan. So these are things that happened after December 31st, 2022. So they have, net debt of $1.1 billion, but that is actually, and I think that probably the market cap on Yahoo Finance of 2.14 or 2.15 billion, it does not reflect recent shares. And so I'll just jump over this. Very recently, when they announced their Q4 results, they also announced that they had a $250 million PIPE, private investment in public equity transaction, where they sold $250 million of stock. And this was an interesting transaction because the investors were effectively the existing holders of the company. And that was, in my opinion, kind of a nice thing to see, because the folks who do know a lot about the business are buying more of the stock. Technically, they bought preferred shares that they are trying to get they have to get an actual vote from the common shares in order to have them convert into common shares. But the preferred shares don't have a whole lot of extra rights. I took a quick look into it, so I don't think they were trying to slide anything through. I think they really just wanted to put it to a vote, although I think these folks have a controlling interest, so I'm not sure what real value there is going to be in having that vote in the future. But so they effectively are putting up more money to invest in the business. And so I think that's roughly a positive. When they purchased these shares, it was the closing price on that day, and it ended up being about $37, 37 and change. And so right now Enviva is trading much lower than that. And so I think this could be a good it's at least an opportunity to purchase shares at a lower entry price, significantly lower, 20 or 30% lower than what insiders just bought shares at effectively. So um anyways, getting back to this, I think I have the full. I think there's about 74.2 million shares outstanding. Let me pull up the calculator after the PIPE transaction. So if we look at the current closing price and we looked at 74 million shares, 28.92. So actually the market, oh no, I guess Yahoo already has this updated. So good on you, Yahoo. 2.147 billion market cap is correct, or looks correct. And so then we add that plus the net debt of about 1.1 billion, and so you're looking at total enterprise value of about 3.3 billion dollars here. So that gives you a rough idea of the size. In terms of their revenue, they have their 2022 results. Let me find them. I guess it's right here. So they made about 1.3 billion dollars in revenue last year. I'm looking at this column here. I'm not going to go through this deferred gross margin transaction today. I will in a future video. It's a bit involved to explain. But if we're looking at this third column here, they had adjusted gross margin. This is adjusted gross profit. I'm not sure why they call it margin. Kind of a term I don't see too much, but of $300 million, adjusted EBITDA of 244. And there's quite a lot of adjustments that go into that number. So take that with a bit of a grain of salt, but it gives you, at least again for an initial introduction overview, a rough idea of where their profitability lies at. So hopefully that gives you some quick overview here. And again, they did pay out quite a bit in dividends. I think they paid out around $200 million in 2022 in dividends. I don't know the number right off the top of my head, but it's around that vicinity. In 2023, if we're looking forward, they have guidance for free cash flow of about $230 million. And I think that's covered from these two slides here. Again, I'm going to go into this in more detail in the future because this is already giving me a fairly long video. But on just sort of a rough multiples basis here, we're looking at, what did I say, $3.25 billion right now in terms of the current enterprise value. If we're looking at the so I guess if you want to look at the EBITDA, right, EV to EBITDA for forward 2023, they're looking at $320 million of EBITDA, and so divide that out, and you'd be looking at roughly a 10, enterprise value to EBITDA multiple, forward EBITDA on this company, to just get an idea of the valuation. And if we're looking at the price of the equity to the free cash flow, that ends up being again, we said the equity was 2.147, I think it was, $1 billion, and they're expecting about $230 million in, or $250 million in, I guess that's kind of, free cash flow, take off the $20 million in maintenance capex and just call it $230 million there, divided by, 0.23, because this is in terms of billions, and you're looking at about a price to free cash flow of, if I did my math correctly, about 9.3 right now. So that gives you an idea. It is, on the cheaper side in terms of the valuation. And the debt that they have is actually interesting because this is one quick note here. They have a good chunk of their notes that are due in 2026. They actually owed a lot. They had a lot more borrowing under their revolver. They paid a lot of this. That's what the proceeds of the PIPE transaction and the term loan that they just took, $105 million term loan. They paid down this revolver here. But what I was going to say is interesting. They have a lot of debt that's not due for quite a while. They have this, this is fairly small, $31 million due in 2029. Then they have $250 million that is not technically, it doesn't mature until 2052. The option holders can redeem, or that the holders have the option to redeem starting in 2032. There's similar provisions for another, chunk of debt that they have. By the way, this debt is specifically, sort of issued by the areas where these new facilities are being built. And so that is how they are able to get these deals that are such a, a long time away at, sort of reasonable rates, right? 6%, 7.75%. So that's an interesting thing about the company that I like. Now, I did mention growth, and I'm not going to go in detail, but just to give you a super quick overview, if we look at this, that's not the right side. Well, this is a bit of an overview, and I'm going to talk. I'll look at one more slide in just a moment. Also gives you another thing to think about. But they have been signing more agreements, right? This recently announced 12 agreements, including 3 industrial contracts. And they're signing these large agreements, and these are long-term agreements with folks to sell their wood pellets and deliver them. And they grew their backlog of, from $21 billion of revenue to about $24 billion in 2022. And so that is really, really nice to see that they've got such a large backlog, $24 billion. I think there's I think in the 10K they called this out, that this is let's see if I can find the verbiage. Yeah, so our volumes under our firm and contingent long-term take-or-pay off-take contracts, provide for product sales backlog of $23.5 billion, with a weighted average remaining term of 13.7 years. So they've got this booked out for quite a long time. So very stable revenues that we can expect from these folks. And I think that is one of the reasons why, when I started digging in, the market is obviously going down quite a bit in terms of Enviva stock, right? You can see it's just been free falling for the past year. And usually when you see that and you see a company that's paying a dividend and now it spikes up to, way, above 10%, like that's a red flag for a lot of people. Oh, hi, Walkaza. Thanks for hopping on the stream. Sorry, I'm not sure when you hopped on there that my chat is was behind my other window. So thanks for joining. So I think, a lot of times when you see a company going above 10% yield, that's a red flag that they're going to cut the dividend. And I'm actually not sure. It certainly could happen. I'm going to go over this. I'm going to have a future video that's going to be talking sort of in the details, so you can make up your own mind on how safe you really think the dividend is here. But that large backlog does let them, I think, plan appropriately for getting to the point where they think they can actually cover their dividend. So historically, at least in the past year, they have not been able to cover it, and they have with their operations, and that's, I think, where you see a lot of the bearishness coming in, people expecting dividend cut. But I think they have some growth that's upcoming, and that large backlog does let them plan with quite a bit of certainty for the future, to where they might be able to grow into being able to cover this dividend. That's certainly what they are proposing in their investor presentation, where they basically say, we think in 2023, I'm not sure where it is, I think that they're going to cover the dividend, cash flow from operations covering dividends at a range of 1.09 to 1.3, and they expect to continue growing this. I'm not sure where it is in here, but they say basically we're going to become self-funded for all of our growth and the dividend by 2027. I think they're targeting a 1.5x coverage by 2024 or 2025 of the dividend. And I don't see it here off the top of my head, but just scrolling through, but it's in here somewhere where they're really trying to grow into that. And I'm gonna go through more of the numbers in detail in a future video, because it's already pretty long, but hopefully that gives you an introduction into the company. So all right, thanks, Wakaza, for hopping on. That was all that I had for tonight. And I guess I could mention my future videos on this company that I have planned are, one, going in detail over their recent financials, because on paper they're losing a bunch of money. In reality, things are a little um, a little more complex and nuanced than that. I do intend to talk about their dividend safety in as much detail as I can, and also you talk a little bit about there was a short report by investment firm Blue Orca, I think it's called. And so one of the things that they really called out is that the Enviva is so far away from being able to cover their dividend, they're going to have to cut it, maybe even eliminate it entirely. And I wanted to sort of dig into the numbers on that. And then I also wanted to go over, their production growth, the projections that they have for how that's going to grow, and what that could mean in terms of the revenue and the profitability for the company, over the next couple of years. So that is what I have planned to talk about the company. Again, there's a lot going on. It's pretty complex. So, all right, I am going to hop off then for today. Thank you all for watching, and have a good one.